Hi everyone. Today we're going to touch on the topic of price action when dealing with supply and demand zones. Okay, so these are the things that you should look out for, right? Price action wise, when price actually approaches a demand or a supply zone. Okay, so if not, let's dive right in. Okay, so price action wise, right? For demand zones, we're gonna look for a higher low when it comes into demand. So price on a sharp downtrend and when it taps into demand, right, you want to see it print a higher low after that. Okay, and then the second thing is looking for a tap and bounce, meaning it taps demand zone and immediately or almost immediately in the few next few candles actually bounce off and continue or its reversal. Okay, so let's look at the S&P 500 futures. Okay, so over here, right, during this day, okay, there was a sharp downtrend, right? So price actually came into demand zone. Okay, so let's say if we remove this, right, we didn't a demand zone was not formed yet, for example. So price came down over here, tapped this demand zone. Okay, we have a 3 hour demand and even 90-minute demand zone inside of this 3 hour. Okay, so price came in. Okay, so of course this is on a 5 minute. If we narrow down to the 1 minute, it will look a little bit even more a lot more clearer. Okay, but price actually came in, tapped the demand zone. Okay, and then printed a higher low over here before rallying up. Even then, right, it came down. Okay, printed a bigger time frame, a larger time frame, higher low, and then continued to rally up. Okay, so you can see, you know, price eventually rallied all the way up. Okay, based off this demand zone, right? So if you want to, we can go into the 1 minute. Okay, right? So on this day, yeah, sorry. Yeah, so this, right, this was the day that we're talking about. Came in, tap, rally up again, reverse a little bit, and then came in and printed the higher low, and then proceeded to print another higher low. Okay, so these are the things that you want to look out for when uh trading demand zones, right? So what I will do is enter on the higher low because I know always, right, price will actually come down and print a higher low, right? If it is really truly absorbing all this demand, right? All this ex old buy orders, right? Old orders set by the institutions, right? It will always come down. So to limit your risk, don't chase because when you're chasing this, right, you have a spike in your IV, in your contracts, right? Okay, what you want to do is, wait for it to come down. Okay, print a higher low. See, sometimes, right, for example, if you're entering a contract over here, okay, so for example, the bottom is 50 cents per contract, right? By the time it hits up, it's probably like 80 cents. Okay, you don't be chasing all this, right? Because when you see such a huge or such a bearish candle prints, right, it's going to destroy your contract, right? So many times, right, in my own experience, okay, although it printed a higher low, right, but on its contract, right, on the contract pricing, it might even get you a better fill, even perhaps even lower than 50 cents, for example, like 40 cents, right? This will limit your risk, right, based on the chart wise, plus you are getting a cheaper deal for your contracts, okay? And then even then you enter here, right, your contracts probably is like at 50 to 60 cents, okay? So you are very low risk, right? So if it really comes down here, then yeah, you have a stop loss, right, at really 40 cents or something, correct? So because you see, if this is not truly a reversal, okay, it will print or it will break this low, or it will probably break this low, and then definitely your contract price, right? The lows of the contract price, for example, at 40 cents, will definitely go even lower than 40 cents, no doubt. Especially if you're trading 0 day to expiration contracts or short dated contracts, right? So you get what I mean? Okay, so always enter the higher low, wait for it, be patient. Okay, know your zones, right? If you know your zones are here, be patient, wait for it to reverse. Okay, because also sometimes, right, it might just, if you enter somewhere here, okay, it might come up and then breaks down even more. Okay, so that's not a thing. You don't want to be caught up in that, right? Okay, so this is one thing that we look out for. Okay, a higher low. Okay, we can see again. Uh, this day 1 hour zone formed, right? So 1 hour zone formed. Come in and see if you enter on the first time, breaks down, you're gonna lose money. If you printed even a lower time, right, a lower price, right? So what we're gonna do is wait for it to come up, print a higher low on a 1 minute, or possibly better in the 5 minute. Best case scenario, it's closer to the lows, and if it is in demand zone. Okay, so something like that. All right. Even then, I don't think there's much on this day. Yeah. Okay, so these are the things that you want to look out for. Okay, what I mean by tap and bounce. Tap and bounce means the best setups when trading, right? Demand and supply zones will be like that, right? Initially it tap. Okay, so this I don't think is the best case, but you know, we want to see like let me see. Yeah, this kind, right? Comes down, sharp downtrend, tap the zone, and then leaves the zone immediately. Right, so of course he left the zone a little bit, came down again, printed another higher low, okay, and then he leaves immediately. But this is the type of action that I want to see. Okay, whenever I see wicks into a demand, right, it makes me feel, no, I'll be more confident that my demand or possible reversal is coming. Okay, because wicks represent buyers stepping in to push price higher. Okay, right. So next thing for supply zones, we're gonna look for a lower high into supply, right, and tap and reject. So it's a different thing. It's the opposite of demand zones, right? So again, I will use the ES. Okay, um, supply, supply. Right, this kind. Okay, this is a perfect example of a tap. Okay, ignore all this POCs, right? Alright, because this is a recently new strategy that I just adopted. Okay, but even then, right, look at this. Comes in, tap the zone almost to a couple cents, and then bam, sells off, sell off. Right, has a huge sell off. Okay, this is the type of action that I want to see. Okay, this, of course, this is today. Okay, but again, let's go to NQ. Okay, I believe the Nasdaq futures had a better um example. Okay, that I can show. Okay, right. So you see here, see this? This is a very good example. Tap the zone, rally up. Okay, tap the zone, rally up. These are reverse. Okay, these are the best setups. Okay, these are the, I would say this is a A plus setup. Okay, and then what's a A plus setup for a short? Right, will be something like that. Right, this is, comes up, tap the zone, doesn't hang out a long time. Okay, taps the zone, sell off a bit, tap the zone, sell off a bit. But I see it's printing lower highs, right? Lower high here, no, lower high here. Of course, if we go on to the 5 minute time frame, will be slightly different, right? It will just show one or two lower highs, but lower highs, sell off. Okay, so you gotten a good percentage gain, right? And then you see this is a tap and reject that I was talking about. Comes up, tap again, reject, sell off. Comes up, tap again, reject, sell off. And then this, not sure what this is. Okay, but this tap the zone, sell off. So these are A plus setups. Okay, you don't want to see price lingering too long in supply, creating higher highs and higher lows. Those are the setups that right, where that the supply will probably fail, right? Because it's absorbing all the sell orders, the pending sell orders, right? And then it also indicates that buyers are willing to pay higher prices because of higher high, high the concept of higher low, right? Okay, so same thing. This tap the zone, boom, sell off. Okay, and then this one was a crazy one. Okay, tap the zone again. See this 30-minute, this supply is really strong, right? So tap this zone during market hours and crazy sell off all the way to the end of the day, right? Just proceeds to sell off like crazy. Okay, getting shorted down, and then over here we have a tap, and then we rally. No, we reverse. I won't say we rally. Okay, but we reverse. Okay, this came close to it. Probably there might be a zone form here somewhere. I don't know, or maybe even a support or something that lines up with this. Okay, I really don't know. Okay, but this will I attend? Will I enter? I would say depends. Really depends. Okay. uh I will look at spy. I don't know, but the best, really the best ones would be hope. No, I hope that this actually taps just even nicely, right? If it taps 16133.5, right, it just taps it and leaves, right, I will enter calls for it or along the Nasdaq or the Qs, sorry, the QQQs. Okay, and then what kind of action that we don't want to see will be something like this, right? Price lingering, you see, higher highs, higher lows. It's an uptrend, right, inside a supply. Okay, this is the things that you want to avoid, right, when trying to short the market. Okay, so will this supply break this 45-minute supply? Yes, definitely. I think it will break it maybe later on during the day. Okay, we'll see this of course later during market hours, or perhaps even pre-market it will break. Okay, so this is a no-no. Opposites can be said for demand, right? If it spends so much time, you see, like consolidate or maybe even printing lower highs and lower lows, I will tell you my experience, the zone will be breached eventually, and then it'll probably come down to another zone, right? Tap probably another zone. Okay, candlesticks. Okay, demand zone, lots of lower wicks. Okay, so what I mean by lots or lower wicks is very easy. Okay, lower wicks. Okay, so demand. Um, say okay, this is not okay. Lower wicks, yeah, this is a clear example. Okay, sell off. Okay, but then this is lower wicks over here. One, two, indicates buying pressure, right? Whenever there's low wicks, lower price rejection candles, indicates buying pressure, buyers pushing price up higher. Okay, so always take into try to recognize candlesticks well, right? The longer the wick, the better it is. Okay, say again, the longer the wick, the better it is. Like this, lower wick, good. Right, shows that buyers are stepping in. Okay, same thing for supply. See, every time it comes up, there's wicks on the upper end, right? Wicks over here, wicks over here. This crazy wick, you know. Okay, but I don't know what's what caused this, but yeah, still, right? Long wick, you know. So these are the types of candlesticks that I want to see. Sometimes it does this, but then you can revert back to the concept of lower highs, right? Right. So doesn't necessarily have to print wicks every time. Okay, it's not a fixed criteria, but when it prints a lower high, yeah, just enter a short. Okay, risk is minimal, right? Over here, wicks, right? Even then, bullish engulfing, and then a bearish engulfing, right? So sellers take over all this, uh, destroyed, right? Overcame all these buyers over here. Okay, and then you see proceeded, after this 45-minute supply comes up again, tap this newly formed supply based off this, right? Okay, then it's a good shot. Okay, right? So don't make I would say trading supply and demand is really not that difficult, right? Set your key alerts, know how to draw them, and then next you just try to identify based off price action. Okay, you basically can even remove volume. Okay, I won't. I mean, I trade with volume, but even then, right, by removing volume, okay, it can also tell you a good picture, right, whether you should, you know, enter a short or not. Okay, right. So supply, let's say, low, lots of upper wicks. Okay, so like I covered earlier just now. Okay, okay, maybe let's see, um, anything else that we can cover. Maybe we go to Microsoft, right? Microsoft over here, 90-minute supply zone, right? Tap the zone, reject, sell off. Okay, so this is a good solid short, right? How many points? 4 points. Very good, good short, in my opinion, right? Um, yeah, I can't really see much. Let me see. Snow, I think Snow did one that was really good. Okay, you can see from here. 30 minutes. Is this Snow? Ah, F. Okay, Ford. Okay, hold up. Ford. Okay, right. Supply. This is a very good channel. Very good. Supply and demand. Area to trade off. And there's a 4 hour supply here, right? Of course, this is not the ideal ones, right? But 4 hour supply comes in. Okay, this one spent too much time in it, right? But I like this setup for short, right? Because it didn't, next time round when price revisited this supply, okay, it didn't spend too much time in it. Okay, do not delete your supply until it really breaches. Okay, although we dislike this type of action, right? But this, in my opinion, is good enough because it, no, there's existing supply here, but it tapped the zone and then sell off. Right? If you didn't enter here, the next time round, look out for these types again. Right? Tap the zone very nicely. Doesn't spend too much time. Quick tap and then sell off. Okay, and then you can probably try to enter at the low high. Same thing for this. Right? Tap the zone, the wicks, right? There's lower wicks over here, and then it shows you like I mentioned, right? You want to see lower wicks, good. Lower wicks are good. Okay, and then proceed to rally up. Okay, we can see on this day, right? Let me see. See all this buying pressure, right? 9:30, the open market hours, bearish candles, two bearish candles, and then see all these wicks should have indicated to you that there's a lot of buying pressure, or at least buyers stepping in. Okay, overcoming all these sellers. Okay, right. Of course, eventually this supply got breached, right? So you see how many times it's been used? At least 4 times. So might be because of news as well. But see, eventually it got breached. So you see this kind of action, momentum candles inside supply is not a good thing. Okay, same thing can be said for demand, right? Huge bearish engulfing after one another is not a good thing. Okay, so momentum push up, and then this I would say this is a rally base rally. Okay, so these are the things that you don't like to see. Okay, right. So for flip zones, this is a very clear example, right? We know that this supply zone has been tested many times. What do you mean by that is shorts are always entering at this area, okay? Because they know, oh, I short this area, it will come down. Yeah, it's true. They did it 4 times. Okay, but look at the last time, right? Uh, Eventually all these shorts, right, try to short the stock, right? Actually got overcome by buyers. Okay, so when the next time round it came in, tap the zone again, they are definitely going to sell for break even. Okay, they're going to cover for break even, 100%. Okay, or limited losses. Okay, so this is what happened, right? You see this buying pressure, these are definitely shorts covering. Okay, and then of course might be confluent with a support, right? This is the all-time high, right? And then eventually it rally up. Okay, so this can be attributed to support over here, prior resistance turn to support, and also uh no the concept of shorts covering. Okay, right. So I think I covered good enough topic, right? So if you guys have any questions, can feel free to DM me on my Twitter at Ken_trades. Right, so formally there, I have education and chart ideas. Or you guys can follow me at not me, but follow Black Metal Finance for any of my trade ideas. Okay, so any questions can hit me up with my DMs. All right, see you guys.